Welcome back to the channel. Today we are talking about something very important, why the stock market stumbled recently. Top market strategist Tom Lee said there were 5 big reasons why the market fell. But he also gave advice that many investors have heard from him before, and it's something calm, simple, and helpful. Let's begin. The market has been strong for many months. Before we talk about the fall, we need to understand one thing. The stock market has been going up for months. When the market stays strong for a long time, it is normal to have a pullback. It doesn't mean the economy is breaking. It does mean a crash is coming. Sometimes the market just needs a pause. This is the first idea behind Tom Lee's thinking. Tom Lee says there are 5 reasons for the drop. Reason 1. Interest rates moved up again. When interest rates rise, borrowing becomes more expensive. Companies become more careful. Investors feel nervous. Higher rates can slow the market, even if nothing else is wrong. Reason 2. Oil prices went higher. Oil prices rising can cause higher costs for transportation, higher costs for companies, more fear of inflation. When people fear inflation, they become more careful with stocks. Reason 3. Mixed corporate earnings. Some companies share good earnings. Some shared weak earnings. This mix of results make investors unsure about the future. Uncertainty often leads to selling. Reason 4. Global worries. There are still global problems, including slowdowns in other countries, trade concerns. When the world feels risky, the US market often becomes cautious too. Reason 5. Investors were too positive. Tom Lee said something interesting. People were feeling a little too happy and too confident. When too many people think market will go up forever, a pullback usually happens. This is normal and healthy. Tom Lee's advice: just stay calm. Stay calm, don't panic. He said the recent fall is not a sign of a big crash. It is not a sign of recession. It is not a sign that investors should run away. According to him, the US economy is still strong. Many companies are still growing. Inflation is slowly improving. The long-term market trend is still positive. He believes investors should not be scared by short-term drops. Why Tom Lee thinks the market will recover? Tom Lee believes things could improve soon because the Fed may stop rising interest rates. Inflation is not rising fast. Earnings will improve later this year. Tech and AI growth are still strong. There's still a lot of money waiting on the sidelines. When fear goes away, money usually flows back into stocks. What does this mean for regular investors? The drop happened for normal reasons. Nothing is broken in the economy. The pullback may not last that long. Staying calm may be the best choice. Long-term investors should not be panicked. Tom Lee's message is very clear. Short-term noise should not change long-term thinking. Well, let's summarize. His point for why market stumble is very clear and very obvious. It just happens is because higher interest rates, higher oil prices, mixed earnings, global worries, too much investors' confidence. He believes the drop is normal and the future is still bright. So continually to watch the market and stay alert. Well, thank you for watching and have a good day.